Okay, 3, 2, 1, let's jam.
What is up, guys? G here. Welcome back to another video. I hope everyone is doing well. Let me know how you guys are doing in the market so far. Today I want to talk about our beloved Polestar GGPI stock. I do have some news updates. Some are good and some are bad. There's a few different ways this can all play out, so definitely want to stick around for this one. Obviously, I'm going to go over that news, but I also do want to share the unusual whales flow with you guys and show you guys when I expect a larger move for Polestar. And then lastly, we'll also take a look at the chart and I'll give you guys my take on some technical analysis. Before we start, take one quick second to ascent the like button and legato the sub. I also do have the unusual whales link with the small discount, which we'll be using in today's video. I think you guys will find tons of value from it, so definitely take advantage of that. So I'll put that in the description below. And with all that being said, let's go ahead and get right into it. And so I think we've covered some of this in some of our live streams, but Polestar is in the UAE market now. Most recently, they did just confirm their pricing in this market as they opened up the pop-up shop in Dubai. And so this will be a nice little place where customers can interact and experience a Polestar before they purchase one. Obviously, Dubai is going to be a huge market. I think it's a very well income market there. So I think they're going to do very well as far as sales go. The most competitive part about this is that they are going to be pricing their Polestar 2 a lot lower than the Tesla 3. So they're definitely going to be able to pull some possible Tesla customers into the Polestar side. And as we mentioned in one of the live streams, they did get a partnership with one of the biggest car distributors in the UAE market. That is Al Futan, I believe. I'm not sure if I pronounced that right, but they're definitely going to help them with the distribution and promotion of the Polestar 2. So that's going to be great for Polestar. They're also doing very competitive prices, like I said. They are starting their prices a lot lower than Tesla. So the basic model, the standard range, is going to be about 45K. And then the other two variants, the long range single motor is about 55K if you convert this to US dollars. And then the long range dual motor is going to be about 57 to 58,000. And so I think that's going to be very competitive. As you can see, the basic model for the Tesla 3 starts around 51,000. So kind of in between our lower tier variants, the 44K and the 54K. So I think the 44K model is going to sell really well. That's about $6,000, $7,000 in savings. Obviously, the battery range is going to be a lot more efficient with the Tesla, but I think there'll definitely be some customers that don't really care too much for that, and they'll kind of end up getting a Polestar 2. I think that's going to be huge, and obviously there's a lot of anticipation for the Polestar in the UAE market. It's going to be the first opportunity for them to be able to engage with Polestar and the Polestar 2 model. And then speaking about opening up a pop-up shop in Dubai, they actually just moved in permanently into Scottsdale, Arizona. And this is actually very good news, guys, because it's going to become their first retail location in Arizona. They're going to be able to provide online sales, service, test drives, everything for a customer to be able to gain that Polestar experience. And so this is going to give them great brand exposure. And if you guys didn't know, Arizona is actually one of the largest markets for the electric vehicles. As you can see, Arizona is already the 11th largest market in the US for EVs. So I think this is a great move by the marketing and all the management team to go ahead and get a position established in Arizona. Arizona is growing about 96% year over year as far as electric car sales. And let me correct myself, I think they were already delivering cars in Arizona, but they do have a permanent home now. They're actually just working out of a temporary facility. But now they're going to be able to do a lot more with it because they're going to still deliver the 2 motor variants, but now they're going to create a nice customer experience for them. So basically, customers within 150 miles can actually just go to the Polestar in Scottsdale and get their vehicles serviced free of charge. So that's going to give them a very convenient Polestar ownership experience. They also do think about people outside of the 150 miles. They're actually going to do a mobile service program to allow them to train some technicians and travel. So I think something like Tesla, I don't know if you guys seen the Tesla vans around, those do like minor repairs and software updates. So I think that's a great approach, modeling themselves a little bit after Tesla. Obviously that has been successful for them. So that's great to see that Polestar is not ashamed to pick up business models that actually are working. And so for that mobile service program, they're going to just give them a Polestar contact number and they'll be able to service them like that. So I think all that is great news, guys. I love the exposure into the UAE market. I think that's going to do very well. And then I also really like that they're continuing to expand into the US markets with Scottsdale, Arizona, as they continue to get to that goal of 35 markets across US and Canada by 2022. But let me know your thoughts in the comments below. So I wanted to let you guys down easy with the good news first, but we do have a little bit of bearish news. So Gores did end up pushing back the termination date by 1 month. Now for those long-term investors, this is not terrible news. This just means that we're just gonna have to wait a little bit longer before they can actually become publicly traded. And I think actually this might be a blessing in disguise, because if this does bring the stock price down more, it'll actually provide us a great opportunity for me and you to both add to our positions. So as of now, I think the merger date the termination date was scheduled for like May 27th, but now they pushed it back a month, and it looks like the deal termination date is now set for June 24th. So in the short term, we're just gonna have to wait a little bit longer, but for long term, 1 month will fly really quick if you guys plan to hold this for years to come. But again, I don't think this is terrible news in the short term. Yes, it might bring the price down, but I do want them to be able to have enough time to file everything that they need for the SEC. Obviously, I don't know too much about the filings. I want to make sure that everything is filed correctly for them, so all the T's are crossed and their dots are i'd, or however you say that. I think this is great because I do think now they have a little bit more wiggle room to be able to double check and verify everything before the merger does happen. I also do think this is a great move by them, because with the current market conditions, everything is very bearish. They don't really want to go public or merge in a time like this where everything is kind of selling off. I want them to complete their merger in a good market conditions and be able to blast off into space. But that is just my thoughts, guys. Let me know your thoughts in the comments below. But in the short term, I'm going to be on the sidelines a little bit and wait for a nice dip opportunity to get some shares. So before we actually shift over to the technical analysis and do some charting, I want to show you guys why I am bearish in the short term. We are actually on the Unusual Whales platform here. Like I said, you guys are welcome to create a free account and take advantage of some of the free tools that they offer. But here I want to show you guys the unusual flow and show you guys why I am bearish. So right now I'm in the intraday analysis for GGPI, and this actually breaks down the top 5 option chains by volume. But I want to scroll all the way down to the premiums down below. So from this chart, you can see the minimum premium is 30,000. So any orders below this will not show up in these charts. As you can see, the bearishness is about 58% versus a bullishness of about 40%. One thing that you might notice from this chart is you can see there's a lot of premium for the calls and a lot of volume for the calls, as well as the number of calls to put ratio. But unfortunately, a lot of this might be selling calls. And so the way that I'm able to interpret that is because a lot of the ask versus bid, if the calls are executed on the bid side, that means that they're actually selling those calls, and if the calls are executed on the ask side, that means that they're bullish. So that is actually lining up a little bit with the bullish and the bearish premium here. So my take right off the back is probably they are selling a lot of calls. I think institutions probably have tons of shares, but they don't want to just have dead money sitting around, so they're actually selling these calls to a lot of retails. Since I think most of their pricing is probably around 10, they're going to be selling the 12s and the $15 strikes. And so if you take a look at this line graph here, breakdown by expiration date, you can see that most of the contracts are actually open for July 15th. So there could be some sideways action leading into June. And then I think from June going into July is when we'll have our big runs. So that's for the biggest premium orders, that's 30K and above. All the bullish and the bearish is broken down here. For the purposes of this video, I'm not going to cover the rest of the charts, but you guys can take a look at that on your own time. I will say for the smaller orders, the premium is going up, which actually aligns with why I think a lot of the bigger whales are just selling calls to some of the smaller retail. So I would be very careful with the short-term options and just kind of buy shares if you can. But in my opinion, I think I'll probably start loading some calls probably by mid-May, and then I'll kind of go from there. But again, this is just breaking down all the options flow from retail, bigger orders like the whales and everything that institutions are doing. So definitely take a look at that on your free time. The last thing I want to show you guys in the Unusual Whales intratrade analysis is the open interest changes. If you take a look at the highest open interest, you can see that the most interest is going to be for the $10 puts and the $10 calls. Personally, me, I would not be too interested in these just because these are for the May, and $10 is really the redemption level, so I think this is probably just noise. The next highest ones are going to be a little more significant. As you can see, these are $17.50, but these are actually for July, and then the $15 are for June. So this kind of backs up my thesis, and especially with the deadline extension, that most of the move is going to come in June and July. Also, if you take a look at the highest open interest decrease, you can see that it looks like they're closing a lot of their May contracts. So they have the May contracts for $12.50 and the $17.50 for May. And you can see the previous open interest was about 15,000, and then the current open interest as of last trading day did come down about 994. So from when it looks like these currently open contracts are being closed out, so they probably don't expect to move in May. And it looks like the same thing can be said for the rest of the list here. So in my opinion, I would definitely take a look at the June contracts. If you guys are interested in playing contracts, I would look at the Junes and the Julys, but anything in May I would kind of stay away for. I think it's just not going to be risk reward. I do think we'll get merger date announcements and date set maybe in early May, and I think that will give a good opportunity for a nice pop. But overall, I think the huge move is scheduled for maybe June and July. The last thing I want to show you guys on here is going to be the put to call ratio. You can obviously see that the volume is all on the call side. There are some puts here, those $10, which I think we kind of took a look at earlier. But my opinion, like I said earlier, I think a lot of these calls are from institutions. As I have historically shown you guys, there's tons of institutions in this company, but I think they're trying to make a little bit of extra money while the stock trades sideways. So that's why they're selling all these contracts in the meantime. Alright guys, so we'll wrap up the video by doing some technical analysis on GGPI. You can see we closed at around $11.32. The first thing, like I always say, is watch the volume. Obviously the volume has died. We're trading around 2 million daily now, which is not great. And the first thing you could already notice well is that we did get rejected here at the monthly level here around $11.40. So in the short term that is a little bit bearish, so I do expect us to maybe come back down and touch $11, and that will actually line up with our OBV indicator here as well. If you take a look at the OBV, you can see we had this nice resistance which we failed to break through on our first attempt, but we actually did break it and then reclaimed it as a support, and that's what actually caused this last run up, which was back in April. Unfortunately now it looks like we're coming back down to this trend line as well, so I do expect a little bit more downside down to $11. So all that's going to be on the daily chart, guys. If we actually do fail and break below that, then our next level is going to be this nice ascending support down here. So I would expect around $10.80. And then obviously with some of the extension deadlines and everything, I do expect us to continue to sell off, especially if the market indexes continue to sell off as well. The great thing about GGPI is we are near the redemption level, so I don't expect too much more downside, especially for those long-term investors. Again, you're more than welcome to add more shares. I will definitely be watching this to add some shares. Just clearing some of that out of the way. Again, I would watch the $11, which is going to kind of align with our ascending support on the OBV daily here. And if we fail to break that, then we would come down to about $10.80, possibly even $10.50. Currently with all the market condition, it is hard to be bullish, but if we can get a nice bounce off the OBV, we could see a little bit more upside back to about $11.80, but we'll have to wait and see how that plays out. So I would definitely keep an eye out on that, as well as a pickup on volume. Well guys, that's going to about wrap up today's video. Let me know how you guys will be playing GGPI. Are you guys excited for the upcoming merger? Obviously there's still a lot of different things that can play out. I feel like there will be one random spike when they announce the shareholder meeting, but for the long term I am definitely looking into June and July. I hope you guys enjoyed today's video and found some value. Definitely share this with all your GGPI investors, and definitely smash the like button, subscribe to the channel, and I hope you guys take advantage of the unusual whales discount that I provided for you guys. If you guys have any questions, don't hesitate to put them in the comments below. I hope you guys have a great day. I will see you guys in the next video, and as always, keep moving forward.